All right, looks like we have a good number of people on, and we do have quite a bit to cover. So let's go ahead and get started. Thank you so much, everyone, for joining today. I'm really excited that you're all here. And just a couple of housekeeping things before we begin. We'd like to let you all know that this workshop is being recorded, and informational materials will be available to all of you following today's session. If you have any questions, please feel free to put those in the Q&A. We'll take a couple breaks to answer questions throughout the session, as well as with whatever time we have remaining at the end. And last, if you do need to use closed captions, I'm putting a link to a support article that it provides instructions on how you can enable those so that you can use closed captioning during the presentation. All right. My name is Jobe, and I'm the Senior Associate of External Affairs here at Savi. And I'm really excited that you're all here so that I can tell you a little bit about how Savi works, as well as provide you with some policy updates affecting student loan borrowers. For those of you that may be new to Savi, a little bit about us. We are a public benefit corporation, and we started about 5 years ago to help borrowers just like you all. We're run by experts and advocates that have over 2 decades of experience, and many of us also have student loans of our own, which helps us to help you. And last, we're focused on savings. We help borrowers find savings through programs like income-driven repayment plans, which base your monthly payment off of your income. And one of the biggest programs that we help borrowers apply for is public service loan forgiveness, which forgives loans for public service workers after they've worked in public service and paid on their loans for 10 years. We're going to cover that program in more depth coming up very soon. Since that is the main program that we help borrowers apply for, we want to make sure that you've got all of the info needed to take care of that. So today's agenda of everything we'll be discussing, we went over the introduction to Savi, and then we'll go over the overview of public service loan forgiveness so that you can understand all the requirements for that program, as well as what you need to do to apply. After that, we'll spend the bulk of our time talking about major policy and program updates that are affecting student loan borrowers. And then at the end, we'll wrap up with an overview of how you can get started with Savi, as well as what our website looks like so that you know what to expect when completing our application. As I said, if you have any questions throughout the presentation, please put those in the Q&A and we can answer them as we work through, as well as take a couple of breaks to answer them aloud as well. So a little bit more about Savi. The goal of Savi is to make it easier to manage your student loans. We help simplify and digitize the application process for federal forgiveness programs. Working with Savi, users can reduce their student loan payment by about an average of $150 a month. And on average, our users are eligible for around $20,500 in forgiveness. So it's a great way to take advantage of a sizable amount of monthly savings. So far, we've helped users find over $1 billion in projected loan forgiveness. And I think one of the biggest benefits of Savi is that you can complete just one application to see personalized options for all the programs that we'll cover. So it's a really simple, really easy way to enter a bit of information and see everything that you qualify for in one spot. So let's talk about that public service loan forgiveness program. Many people may have heard of this program, but not understand all of the pretty specific details and requirements that go into qualifying for this program. Many people think that just by working in public service, you may qualify and don't understand that there's other requirements you need to meet. So let's break all of these down for you. In order to receive public service loan forgiveness, there's 3 main requirements that you need to meet. The first of which is that you need to work in public service by working for a qualifying employer. This is a government organization at any level. So this can be federal, state, local, or tribal government. If your employer is not a government organization, it can also be a not-for-profit 501c3. So as long as your employer is a government organization or a not-for-profit, it is an eligible employer for public service loan forgiveness. With that said, you do need to work full-time in public service to qualify. That definition of full-time is at least 30 hours per week. If you work less than 30 hours per week, there is an option for part-time employees. You can combine multiple part-time employment in order to reach that 30-hour threshold so that you can still qualify. So for example, say you work 15 hours a week at a government organization and 15 hours a week at a nonprofit. As long as you're working at both of those employers at the same time, you can overlap that employment to reach that 30-hour threshold so that you can still qualify for this program. So that's requirement number 1, work full-time in public service. Requirement number 2 is that you do need to have qualifying loans. For this program, you're required to have direct federal loans to receive this forgiveness. So this means that if you don't have direct federal loans and you have loans like an FFEL loan or a Parent Plus loan, those need to be consolidated to be eligible. So once you consolidate that loan, it will convert it to a direct loan, and therefore it would be eligible for this program. Unfortunately, if you do not have federal loans and you have private loans, those do not qualify for this program. Only loans that are direct and federal loans can qualify. And if you don't have direct loans, you can consolidate them, but unfortunately, private loans cannot be consolidated. So that's requirement number 2. The third requirement is that you need to pay your loans on a qualifying repayment plan. For PSLF, you're required to pay your loans on an income-driven repayment plan. This is a repayment option that bases your monthly payment on your discretionary income. So each payment is calculated somewhere from 10 to 20% of your income, depending on which of the income-driven plans that you enroll in. There are 4 different income-driven plans offered, but as long as you enroll in one of those 4, it is a qualifying plan for PSLF. You'll also be required to make your payment on time for the full monthly amount in order to ensure that it meets the requirements. So those are the 3 main things that you need to do in order to start earning progress towards forgiveness. Work in public service, have direct loans, and pay your loans on an income-driven plan. Once you're meeting all 3 of those requirements, you'll then need to make 120 payments on your loans. So each payment needs to be made while meeting all 3 requirements. Once you've made those 120 payments, your entire remaining balance is forgiven. So whether you still owe $1,000 or $100,000, the entire remaining balance will be completely forgiven. Another great benefit is that PSLF forgiveness is not taxed at the federal level. So whenever you receive this forgiveness, it's tax-free, and it's a really great way to take advantage of loan forgiveness. We're seeing a lot of people receive this forgiveness right now, and I can think of a situation just off the top of my head last week. We heard back from a teacher in Pennsylvania who received over $200,000 in loan forgiveness. So it's a really great way to receive loan forgiveness. It can benefit a lot of borrowers, and we have really good success with helping people apply and receive this forgiveness here at Savi. Another benefit is that payments don't need to be consecutive, just cumulative. So it's okay if you have a couple of gaps in your repayment history. As long as you have 120 cumulative payments, your balance can be forgiven. So for example, say you've made 60 payments on your loans, but then you pause your payments for a year. Once you started paying again, you would pick up at 60 to continue your progress. So since they don't need to be consecutive, it may take you longer than 10 years in order to gain those 120 credits. However, you can't make extra payments to qualify sooner. So at a minimum, it will be 10 years until you can qualify. They'll only count 1 payment per month, and you can't make extra payments to receive this forgiveness sooner. So how do you apply for this program? How do you know if you qualify? And how do you see how many payments you have? All of this is done by submitting one form, which is the employment certification form. This is a form signed by both you and your employer that proves you work in public service. Once you sign and submit this form, Mohila, who's the servicer that manages forgiveness, will go through and count up all the payments you made at that employer that meet the requirements. They'll then let you know how many you have and how many you still need in order to receive forgiveness. They'll only count the payments for the employers you certify. So if you have multiple employers, you'll need to submit one form for each of your employers. The PSLF program started in October of 2007. So this means you'll want to certify employment going all the way back to that date or when you first started paying on your loans. So October 2007 is the latest we need to go back to. And as long as you've got there to now covered, you'll be good to go. Once you have submitted your first round of forms that give you credit for all the past payments you've made. You'll then want to submit a form once every 12 months in order to get credit for another year and track your progress towards forgiveness. While you can submit a form at the end of your 10 years, it's more likely that you'll miss something because it leaves you tracking down employers from over 10 years ago, and it's likely that something could be missed. So the best thing that we recommend to do here at Savi is submit a form each year. This will allow you to get credit for 12 more months, 12 more payments, add them to your total, and know exactly where you are on the path to forgiveness, and how long you still need until you can receive that forgiveness. The really beneficial thing about Savi is that you can see your eligibility for PSLF and apply for it all through your Savi account. So I'll show you in our demo coming up soon what our application looks like. But working with Savi, you can see if your employer qualifies for forgiveness. You can see how many credits towards forgiveness you already have, and we'll help you create and submit your applications to actually get credit for those payments. And I'll show you exactly what that looks like coming up soon. I see there's a question in there. Someone says, what if an employer doesn't complete the PSLF form? Is there another way to show that you worked there? So in most cases, the easiest way to get credit for your payments is to get that form signed and submitted. You can create that form through Savi, and we will also work with you and your employer to get it signed and submitted as easily as possible. In some cases, an employer won't sign the form, or maybe that employer has closed and doesn't exist anymore. If that's the case, there are some backup options that you can do, such as submitting a W-2, submitting a letter from your employer on letterhead, letting you know why it can't be signed, and there are some backup options. So if you're having difficulty getting your employer to sign your form, I encourage you to start working with Savi, reach out to our support team, and we would be happy to provide you with some backup options to try and get that form signed and submitted as soon as possible. All right, so that was public service loan forgiveness in a nutshell. Now, we're going to spend some time talking about the major policy and program updates that have been affecting borrowers. There have been a lot of new and exciting updates that are designed to help more people qualify for loan forgiveness, help make managing your payments easier. It's really kind of busy time in the student loan world, and it can be really hard to keep up with all the new, ever-changing requirements. So we're going to do our best to break them down for you here now. We're going to talk about some upcoming PSLF improvements that are designed to make the program more beneficial for borrowers. After that, we're going to talk about President Biden's debt relief plan, which you may have heard about in the news. From there, we'll cover the payment pause and talk about a new program called Fresh Start that's designed to help borrowers in default. Last, we're going to wrap up with some account adjustments that are designed to give borrowers credit for more past payments. And before we move on, I do see someone had a question about PSLF, and they want to know if volunteer work can count towards PSLF. So unfortunately, volunteer work does not count for PSLF. In order to qualify, you do need to be an employee of that organization, and you need to work full-time. So while volunteer work does not count, any full-time employment with a nonprofit or government organization will qualify. All right, if you have any other questions, feel free to put them in the Q&A. But moving on, let's start talking about some of those policy updates. So coming up later this year, the Department of Education will be making lasting improvements to the PSLF program. So in July, they will be making some adjustments that are designed to help more borrowers get credit for more past payments. You may have heard about something called the limited PSLF waiver. This was the temporary opportunity last year that helped borrowers get credit for more past payments that didn't meet all the traditional PSLF requirements. The department realized how beneficial that waiver was, and they're working to make some of those temporary changes permanent so that you can get credit for as many past payments as possible. This will help reduce barriers that have made it harder to earn progress towards forgiveness. So the way they're doing this is kind of broken down into two parts. The first thing they want to do is help borrowers earn progress towards PSLF more easily. This will be done by letting you count late, installment, and lump sum payments that you've made on your loans towards that 120 required payments. They'll also be allowing you to count certain forbearance and deferment periods, such as military deferment. I believe cancer deferment treatment is in there as well. So several different forbearance and deferment periods will now be allowed to count as in repayment to count towards your 120. And one of the biggest changes coming up are that you can receive a weighted average of existing payments on a new consolidation loan. So thinking back to the PSLF requirements, remember, if you didn't have direct loans, you need to consolidate to make it eligible. In the past, when you consolidated, it completely reset your payment count to 0, and you needed to make 120 more payments on that loan. But now moving forward, they're going to take that weighted average of existing payments. That way you can keep credit for payments you've made and not have to restart at 0, so that you can receive that forgiveness even sooner. The second thing the department will be doing is simplifying the criteria to make certifying employment even easier as well. They'll be doing this by applying a standard of full-time employment at 30 hours a week. So in the past, under the old rules, the requirement was 30 hours per week or your employer's definition of full-time. This means that some borrowers needed to work more than 30 hours because their employer's definition of full-time was higher. Moving forward, anyone working at least 30 hours per week will be considered full-time and be eligible for public service loan forgiveness. Another change is that they'll be allowing adjunct faculty to multiply the credit hours they teach by 3.35. So this will allow part-time employees, specifically adjunct faculty, to multiply their hours to get closer and hopefully even over that 30-hour threshold so that they can qualify as well. And finally, they'll be allowing contract workers to certify employment too. So under the old rules, you needed to be directly employed by the employer to qualify. But in some states, there are special situations where employment can only be performed by contract workers, specifically in relation to hospitals. Those are the most common situations where we see this. So under these new rules, those contract workers that are contracted to work with a qualifying employer will also be able to certify employment so that they can receive this forgiveness as well. I see a great question. Someone says, if you were employed before 2007, does that mean you weren't eligible for PSLF? So what that means is that any employment and payments before October in 2007 is not going to count towards your 120. However, if you started working before 2007, but you kept working after that, the payments after October 2007 can count. All it really means is that they're not going to count anything before that date, but anything after is fair game. All right, moving on, let's talk about a new program that's been in the news a lot lately that many of you have heard of and have lots of questions on: President Biden's brand new debt relief plan. Last year in August, President Biden announced a brand new plan designed to give borrowers up to $20,000 in debt cancellation. Under this program, if you met the income requirement, you could receive $10,000 in loan cancellation. If you received a Pell Grant, you could get an additional $10,000 for a maximum of $20,000. Unfortunately, pending lawsuits have put that program on hold. And as of November 11th, the Department of Education is no longer accepting applications. Some of you may have applied before that date, and if you did, the department will hold your application and you do not need to reapply. You may even receive an email notifying you that you are approved, but the cancellation can't be given out yet. The program is on hold due to those lawsuits, and the lawsuits have actually worked their way up to the Supreme Court. So now it's up to the Supreme Court to decide if this program can continue. On February 28th, the Supreme Court heard oral arguments in the case against debt relief. Savi was actually at the hearing. I myself was able to attend. There was a large rally outside the court for people that were in favor of this cancellation, and we were there to monitor the situation and bring you all the updates. So now that those oral arguments have concluded, the Supreme Court is faced with determining if the program can continue. They will determine if the plaintiffs have standing in order to bring this case forward. If they decide that the plaintiffs do have a valid argument and the program isn't legal, the program is not going to continue. But if they decide that they don't have a standing, or if they decide that the program is legal, the program can continue. So basically, to sum this all up, if the Supreme Court decides the program cannot continue, this cancellation will not be given out. If they decide that it can continue, the program will resume and this cancellation will be given out. Right now, it really is just a waiting game. The Supreme Court is very private about their decision making, and they don't release any sort of sneak peeks or updates before the decision comes out. So we're not sure how they're going to rule yet. A decision is expected to be released in May or June. So once that decision comes out and we know if this program can continue, we will be sure to notify all of our borrowers so that if you qualify, you can take advantage of this program. Because of the ongoing lawsuits against that brand new debt relief program, the payment pause was extended to give the court time to decide. This recent extension extends payments until 60 days after the court releases their decision. However, if no decision has been released by June 30th, payments will resume 60 days after that. So this means the latest potential start date for payments to resume is September 1st, but it could start sooner if the Supreme Court releases their decision. Savi is going to continue to monitor the situation in order to notify borrowers once a decision is released and when payments are resuming. The good news is that no matter when these payments resume, there will always be that 60-day window so that you can get notified, begin making preparations to begin repayment. A really beneficial feature of the payment pause is that time during this payment pause will count towards public service loan forgiveness, which is a huge opportunity for borrowers. So if you think back a few slides, remember that you need to make payments on your loan in order to gain progress towards forgiveness. But because the payment pause is a special exception, they're allowing you to count paused months towards your 120 credits. So how does this work? Going all the way back to March of 2020, when the program first began, for every month that payments have been paused and you continued working in public service, you can count that month as a qualifying payment credit. So this means when it's all said and done, you'll have the potential to receive over 40 free PSLF credits towards the 120 payments that you need. That's almost a third of the way without having to pay a dime. All you need to do to get credit for those payments during the payment pause is submit the employment certification form for your employer during that time. Once you turn in that form, Mohila, who manages PSLF, will automatically give you credit for all the payments during that time and add them to your total. So because of this, we're really encouraging borrowers to take advantage of this payment pause since it lets you get closer to forgiveness with less money out of your pocket. Now let's talk about a brand new program that has recently started called Fresh Start. So across the country, there are lots of borrowers who may be in default. Once you stop making payments on your loans, after a certain period of time, your loan falls out of good standing and into default. In the past, it's been tricky to get out of default and back into good standing. Borrowers had to consolidate and face high fees or participate in lengthy rehabilitation programs, which could sometimes last up to a year. The Department of Education is working to make it easier to get out of default, and they've done this by creating a new program called Fresh Start. This program is designed to bring borrowers out of default and back into good standing as quickly and easily as possible. Once you're back into good standing, you'll have restored access to income-driven repayment plans so that your monthly payments can be affordable. You'll also be able to apply for public service loan forgiveness again, and you'll be able to take out new student loans. They've also stopped wage garnishment, and there will be no collection calls once you enroll in this program. So for borrowers in default, this is a really simple, quick way to get back into good standing. If you have a defaulted direct, FFEL, or Perkins loan held by the Department of Education, you're eligible for this program. So unfortunately, private defaulted loans do not qualify, but those federal defaulted loans do. To enroll, All you need to do is opt in via phone by calling your collection agency. Simply give them a call, let them know you want to enroll in a fresh start, and in about a month, you'll be transferred to a new servicer, brought out of default, and be put into good standing. If you have any questions about this or you think you qualify for it, I encourage you to reach out to Savi support or give your collection agency a call to enroll today. Moving right along, let's now talk about some upcoming account adjustments, which are also designed to give borrowers credit for past payments. I think the recurring theme here really is to get credit for more past payments, get closer to forgiveness. That should be the department's new motto. So last year, the department announced one-time improvements to address long-standing problems that borrowers have faced. To address this, they're going to conduct a one-time account adjustment that will go back into everyone's accounts and give them credit for more past payments. In order to qualify for this account adjustment, you just need to have direct or FFEL loans that are managed by the Department of Education. So if you have other types of federal loans, you need to consolidate by the end of 2023. If you're familiar with this, you may have heard about it. The deadline used to be May 1st, but the Department of Education recently pushed it back. So now you have until the end of 2023 to make sure that you've got the correct loan types and can be included in the account adjustment. The way this is going to work is that they will go back into your account and they are going to give you credit for all of the following periods. So any month that you were in repayment, regardless of whether your payment was partial, late, on the wrong loan type, or on the wrong repayment plan. They're also going to give you credit for any month that they were in repayment, deferment, or forbearance prior to consolidation. So this means if you made payments and then you consolidated, in the past you couldn't count them, but this account adjustment will count all those past payments and apply them to your total. In regards to forbearance and deferments, they're also going to give you credit if you were in forbearance for at least 12 consecutive months or 36 cumulative months. They'll mark those periods as in repayment so that you can add them to your total. And last, any months spent in deferment before 2013 will also count, with the exception of in-school deferments. So if your loan was deferred for any reason before 2013, that period of time will also be marked as in repayment to count towards forgiveness. So what is the impact of this program and what is kind of the result of it? By going in and making these account adjustments, it will put borrowers closer to forgiveness. So if you're pursuing an income-driven repayment forgiveness, which forgives your loans after you've paid for 20 to 25 years on an income-driven plan, by marking those periods in repayment, it will put you closer to the threshold needed to receive forgiveness. And while these account adjustments are geared towards IDR forgiveness, they'll also benefit borrowers pursuing PSLF. So if you have any periods like this where you may be consolidated or in a forbearance, once those periods are marked as in repayment, you can certify your employment from that time and get even closer to forgiveness. So this is yet another beneficial program created by the Department of Education designed to help borrowers get forgiveness. Right now, these adjustments are expected to take place in early 2024, and it should be an automatic process. So as long as you have the correct loan types by the end of 2023, they'll be automatically included in the adjustment, and they'll go through your history, make the adjustments, and mark all those periods of repayment as in repayment so you can count them for forgiveness. So here's a quick recap of all of the important upcoming dates from all of these policy changes. On February 28th, the Supreme Court heard oral arguments on President Biden's debt relief plan. In May, we're expecting them to release their decision so that we can determine if this program can continue. June 30th is the deadline for that decision to be released. If no decision is released by then, payments will resume 60 days after that. July of 2023 is when all those PSLF improvements take effect. So the changes helping you get credit for past payments and certify employment will take effect this coming July. In September, that's the latest potential date for payments to resume, which is 60 days after that June 30th deadline. December 2023 is the deadline for you to consolidate your loans to get the full benefits of the account adjustments, and early 2024 is when those adjustments are expected to take place. So lots on the horizon, lots of new exciting changes coming up in the student loan world. We encourage you to stay in touch with Savi, to stay in the loop, stay updated on everything happening, since it can be a lot and very confusing. So we're here to help you understand it, break it down, and make sure you're taking action and doing everything that you need. All right. I know that was a ton of information. You may have some questions. I see a couple have popped up. So if you do have any, please feel free to put those in the Q&A. We'll take a couple minutes to answer the questions that you've got, and then we'll talk about how Savi can help you take advantage of all these policy changes. So it looks like someone has a question saying that they received notice about settling their loan with Navient. Um, in cases like that, I really encourage you to reach out to Navient or your loan servicer to determine the validity of those letters. There are lots of private lenders out there that will refinance your loan for a good rate or help you settle. So in those cases, we really encourage you to communicate with your loan servicer to determine if those offers are valid, um, and if that's something you should take advantage of. I also see someone says that they received a letter from Mohila notifying them that their loan balance was zero, but they're still receiving offers to refinance their loan for better rates and things like that. Same thing. Um, if you're receiving anything like that and you're not sure if it is a true offer or not, the best thing to do is reach out to your loan servicer. But if your loans have been forgiven, they're not going to be unforgiven. So if you had that $0 loan balance, you received that letter letting you know your loans were forgiven, uh, your loans aren't going to be unforgiven, and you don't have to worry about them adding that balance back. And someone else has another question and say they have about consolidation and interest adding. Uh, so when you consolidate, what if you do owe interest on that loan, it is added to your principal. And in some other cases, if you take certain actions on your loans, like a deferment, or if you don't pay your interest in a certain amount of time, it is possible for that interest to be added to your principal. If you do have any specific questions about when your interest is going to capitalize, what your interest rate is, same thing. We can help a little bit, but the best thing is always to reach out to your loan servicer to confirm that information, since they are the ones who manage your loans on a day-to-day basis. They are able to help with those types of questions. So if you have questions about your interest rate being capitalized, I encourage you to reach out to your loan servicer. All right. Looks like that's all the questions for now. So we can go ahead and keep on going and talk about how Savi can help you make sense of all of this. So it can be really difficult to navigate all these programs and changes on your own. And luckily, that's where Savi comes in. With Savi, you can explore personalized IDR options and track your progress towards PSLF. You can also receive updates on things like PSLF improvements, debt relief, and more. So we will monitor for all those policy changes that can benefit you, let you know when there's an announcement that could benefit you so that you can enroll and take advantage. We also help you recertify your IDR plan and update your employment certification every year. So if you remember, when you're pursuing PSLF, you do need to submit forms each year to stay enrolled and stay on track. Savi will remind you when it's time to do that so that you don't miss the deadline and can get forgiveness as soon as possible. One of the biggest benefits is that you can sign and submit your applications right from your Savi account. So you can create them and get them submitted quickly and easily, and then track their status all in one place. And finally, I think the biggest benefit is that you can receive personalized support from student loan experts such as myself and all my teammates here at Savi. Anytime you have questions about your loans, a program you qualify for, and want to discuss your options, you can reach out to get personalized support from our student loan experts. So to get started with Savi, you have a couple of options. If you are brand new to Savi, you should receive a link in your email with instructions on how to access an account that we created for you. That email should have come out right before this webinar started. So if you're new to Savi, be sure to check your email and it will provide you with instructions on how to access an account we created for you. All you need to do is reset your password and then you can start our application. If you're a returning user, you can log back in at buysavi.com. So once you've got access to your account, this is what your dashboard will look like. It's the homepage for Savi, where you can see your application statuses and get an overview of everything that you're working on. One of the features on the dashboard are announcements. This will let you know about upcoming sessions like this one, policy changes like payment pause extensions, and anything other important information that you need to know about. So be sure to keep an eye on your announcements tab and feel free to sign up for any of our other workshops. You'll also have the option to invite friends and family. So if you have friends, family members, children with student loans of their own that could also use some help, you can invite them from your dashboard and they can use Savi as well. A benefit is that if you invite 3 people, you can receive 50% off of our Essential plan, which is our premium level of service that gives you access to all the Savi features. You'll also have the option to select a plan. So when you select a plan, that's where you can decide which of the Savi plans is best for you. We have our DIY plan, which is free and lets you still see access to all of the programs that you qualify for. The difference is you'll submit the applications on your own. You'll also have the option to enroll in our Essential plan. This is our most popular plan as it unlocks all the features of Savi, including digital application creation, access to ongoing loan monitoring, access to Savi support. So I encourage you to check out the plan options page to see all the different plans that Savi offers and find the one that's the best fit for you. Okay, so this is what our application looks like. Let's go over this pretty quickly to show you what to expect in order to get those estimates. Everything we'll ask you for, we'll use to determine what your monthly payment could be on an income-driven plan, as well as if you qualify for loan forgiveness. So the first page will ask for family information, since this is used to calculate your monthly payment on an income-driven plan. We'll ask you what your most recent tax filing status is, if you're married, and if you have dependents. After that, you'll enter your income information. We'll ask how much you pay for your loans currently, if your income has changed, and what your income is. For most people, you'll use the adjusted gross income from your most recent tax return. But if your income has changed, you may use other forms to document your income, like your income from a W-2 or a recent pay stub. So whatever your situation is, our application will adjust to let you know exactly where to look to find your income. I encourage you to try to enter all of your information as accurately as possible, since that helps our estimates be more accurate as well. After that, you'll come to our employment page. Here, you can enter in all of your current and past employment to see if they qualify for PSLF. So you can enter their information and we'll be able to determine if they are a qualifying employer and if they meet the requirements for PSLF. The easiest way to do this is to search through our existing database of employers. We have over 1 million employers in our database, so once you type in their name, you can select them from our menu and we'll let you know if they qualify. If you remember, when you apply for PSLF, you need to submit a form for all of your current and past employers. And if you submit those forms through Savi, you can only submit them for the employers you add on this page. So be sure to add all your employers to see if they qualify and make sure nothing gets missed when it's time to apply. From there, you'll go to the loan sync. This is where you can add in all of your loans so that we can see what your situation is, if any additional steps are needed. The easiest way to do this is to sign in with the username and password as your online servicer's account. Savi is not a loan servicer, and adding your loans on this page doesn't take any action on them yet. It simply gives us a snapshot of your loans so that we can give you accurate estimates. When you add your loans on this page, we'll be able to see if you have the required loan types or if you need to consolidate. We'll also be able to see your loan balances, see your repayment history to know how far along you are. And it really just gives us all the rest of the information we need to give you those estimates on the next page. After you've entered all the information, you'll then be able to see what you qualify for. Our application will automatically show you the plan that gives you the lowest monthly payment and the most forgiveness. If you want to see all the plans you qualify for, you can click Show More Plans to see each income-driven plan you qualify for. Our recommendation is usually to enroll in the plan that gives you the lowest monthly payment, since that gives you the most forgiveness as well. Once you've explored what you qualify for and you're ready to enroll, you can select the plan that's the best fit for you to proceed to your application. If you're an Essential member, this is where our membership really shines. Essential members can create their applications digitally to make the process as seamless as possible. On the left, you can see what it looks like when you create your employment certification forms. You'll have the option to start a form for each of the employers you added onto your account. If we don't have contact information for them yet, you'll be able to enter it, and then Savi will take care of sending that form to your employer, getting it signed, and submitting it to Mohila. On the right, you can see what it looks like when you create your income-driven application. The number one reason that applications are denied is because they're filled out incorrectly. By using Savi, you can ensure that your applications are filled out correctly and have the highest chance of being accepted. We pre-fill those applications with all the information from your application, so that all we need from you is that last bit of personal info to sign and submit. Once you sign it, we'll take care of sending it to your loan servicer so that they can enroll you in your selected repayment plan. After you've created those applications, you can then track their statuses back on your dashboard. You can see exactly what the status of each of your form is, whether it's been signed, submitted, and processed. You can also see the status of your income-driven application to know exactly what is still needed from you to get those applications to 100%. As you're working through our application, if you have any questions, we are here to help. Anyone can consult our help center, which includes frequently asked questions, articles with common student loan topics, and even how-to videos that walk you through completing the application. If you are an Essential member, you'll have access to Savi support, where you can reach out to us and we'll get back to you to answer your questions one-on-one and give you that personalized support. And with that, that was a lot of information, but that is everything that I have for you here today. If you are a new member, be sure to check your email and follow the instructions there to get access to your Savi account. I encourage you all to get started with Savi, enroll in the Essential plan if that's the best fit for you, and complete your application to see what you qualify for. So thank you so much, everyone, for attending. We really appreciate your time.